You know that feeling when someone shows up for you just when you need it most? That's what Uber is all about. Not just a ride or dinner at your door. It's how Uber helps you show up for the moments that matter. Because showing up can turn a tough day around or make a good one even better. Whatever it is, big or small, Uber is on the way. So you can be on yours. Uber, on our way.
Reality radio for a really great future. We're talking real money.
Money matters to everyone's life. It's a big part of what you do. You earn it, you spend it, and we hope you invest it. And we want to help you invest it better than you're doing. The right way. We call it real investing and real money. And that's why we call the show Talking Real Money. And you can talk to us at 855-935-TALK. Look, there's another talk in there. 855-935-TALK. 8255. I'm Don McDonald, and over there is Bob, the bunk bed builder. Bob, the bunk bed builder.
You said, what are you going to do on the 4th of July? The one lady called and said, I'm doing the weeds, which that sounds painful, but more painful is trying to finish the bunk beds for my grandsons. Oh,
Bob,
anyway.
The bunk bed builder. Do you have your little tool belt? Do you have your little tool belt, Bob?
Here's the thing. No is the short answer, as you well know. But the brains of the operation, it would be my wife. She'll be along to tell me, put that there, turn here. So that's all I have to do is kind of be the brawn.
So basically, she sits back and supervises.
Pretty much.
While you do the work. Would that be accurate?
I wouldn't put it. She's probably listening, so I don't want to say that right now. But
wait. She knows you do a radio show now?
I know, because now I do it from the house. She goes, why do you go in your office and start talking? Who are you talking to? So anyway, yes,
don't pay any
attention.
Now
figured that out.
Don't pay any attention to the man behind the glass doors. Don't look. 855-935-TALK is our phone number. 855-935-8255. We're pleasantly surprised because we went into this show going, we're not going to get a lot of calls. It's the 4th of July. But, there's one reason to be thankful for COVID. Calls. 855-935-TALK is our number. We're just going to start with a call rather than do something else. And Steve, thanks for waiting, and welcome to Talking Real Money.
Hi, Steve.
Oh, thanks. Thanks, Don. I just have a question about the thrift savings plan for the government.
Okay.
I know it's a low-cost way to invest, but I'm wondering, should I only invest up to their matching point and then put the rest in my self-directed IRA through Schwab?
Tom's thinking.
Here are the advantages of the thrift savings program, the TSP. Number one, you pointed out the costs are exceedingly low. Number two, you actually can invest in bonds I can't even get access to it because there's a bond fund that they sell the bonds only for that fund. The downside is they don't have as great a diversification as we'd like you to have. So here's an idea. If you can save in another retirement plan, like you said, an IRA, then maybe you could own some of the types of stocks in that you can't own in the TSP. For example, the TSP, like most plans, has the Standard & Poor's 500, large
the
US
C
companies.
Fund.
It has the C fund, so you get some small, but not
the
really
S fund
small.
has some small.
Yeah. You don't have much value.
No.
The international you have is really large international firms, not really small. You don't have much emerging markets. So you could put those asset classes, if you will, types of stocks, in the other account so that when you look at the entire thing, you have a more balanced portfolio. That would be the way I would do it.
Although, if you just maxed out the TSP in the C fund and the S fund and then the G fund for whatever you needed to reduce your volatility, the differences should be long-term differences, but they are very likely to be negligible differences. So at these levels of money, it's more of a quibble.
And it's how hard you want to work, right?
And then if I do the self-directed, you have to, like if you're buying an individual stock, you have to save up enough cash and then buy that stock or buy into that fund.
Well, and we don't want you doing that.
Through payroll, you get to make like partial investments. Like they can invest $75 in the C fund, where if I was going to put $75 into a stock, I might not even get a whole share if I do it through my.
I got to tell you, you have swayed me. Max out your TSP. Do not buy individual stocks. Just do the TSP because you're not talking about
annuity. I guess when I retire, do you guys know anything about that? If that's good to take the annuity or just take the lump sum?
I'd be sorely tempted. I think there are great arguments for taking the lump.
We don't know enough about you to give you that piece of advice one way or the other. That's the type of thing you really need to talk to a professional about who needs to understand you, your situation, before making sort of a blanket statement about taking an annuity or a lump sum.
Yeah. Again, we tend to lean lump sum way because it gives you control over your assets. You're not giving up control, but the other is a safe, secure way to have an income stream. So there are benefits and detriments to either side of that coin, but it really comes down to trying to decide what the best thing is for you in your situation at the time you're getting ready to retire. So you want to wait on that for a little while. 855-935-TALK. That's our number, 855-935-8255. You can call that number during the show, of course, from noon to 2 Pacific, 3 to 5 Eastern on Saturdays. But you can also call that number 24/7, and then I'll answer those questions in our daily podcasts that we create brand new ones later in the week. So there's a lot of ways to get in touch.
Tom and Don are talking real money.
We don't believe in seat-of-your-pants investing. We believe investing should be based on solid science, on academic research. That's why on July 29th, we'll be hosting a brand new class, The New Science of Real Investing, at 8 a.m. via Zoom. Get your tickets right now at talkingrealmoney.com. Just click on the new events button or the events button and reserve your place. Go to talkingrealmoney.com and make sure you're there to learn the science of real investing in our next online Zoom class. Go to talkingrealmoney.com, click on the events button.
For your real life and real future, Tom and Don are talking real money.
All of the confusion, the craziness, the obfuscation that exists in the financial industry cut through right here on this program. We rip it to shreds.
By the way, remember in your 20s, the things you used to get excited about, like you got a raise or a bonus or, you know.
I still get excited about those.
I know. Or your girlfriend said she loved you.
Oh, I still get excited about all those.
All right. Well, my son just texted me and said, great news. I thought, okay, what is this? And the great news was he tested negative for the COVID. So that's the excitement, because he just spent a lot of time with like 8 other people in a small place. So he's very happy.
Well, don't do that again.
Well, it was
the 8 other people.
They're fine too.
Were they out at Mount Rushmore?
They were not at Mount Rushmore.
In Tulsa?
They were actually in Eastern Washington.
I'm joking.
At Leavenworth. No. So
Kansas?
That's funny though.
Kansas?
That's Kansas. That's Eastern Washington is not Kansas.
No, but Leavenworth, Kansas. Yeah.
Oh, good point.
Yeah,
good point. Yeah, well, there's other relatives. Other relatives of mine have spent their time there, but that's a whole other
little rooms with a lot of people really close by.
Exactly. Good point.
855-935-TALK is our phone number. Give us a call. We really didn't expect this many calls today. Hey, Philip, welcome to Talking Real Money.
Hello, can you hear me?
Absolutely.
We do.
Well, I had a couple of questions about, since you're talking about annuities today, there's one called a single premium immediate annuity that seems to get better press in the anti-annuity financial advising
it does.
circles.
It gets better press from us, yes.
Well, okay. The second question is, there's a guy on the internet, I don't know who he is, but he goes by the name of Annuity Slayer, and he made a funny video attacking single premium immediate annuities as basically being much inferior to just having a 30-70 stock bond portfolio. But I was curious what you thought of him and what you thought of immediate annuities to be in general.
Well, let me start with the Annuity Slayer. I don't know him. I'm going to have to look him up now. I see his video. But immediate annuities, we just said they get better press because they're a slightly more honest version of an annuity. But, Tom, are there replacements? I mean, there are lots of things you can do. It depends.
Do you recommend them?
My question always, my question always is, Why do you want, what are you annuitizing? What are we doing here? Are you creating retirement income? Because I run into people all the time who already have a pension and Social Security, and they say, I'm going to get an annuity. Why? Why do you want to take a bunch of your money, give it to somebody else, have them give it back to you at a fairly low interest rate?
Well,
that's what I'm trying to get
question,
to, right?
But I just wanted your feedback on it.
Yeah. Yeah, I mean, again, I don't know your situation well enough to tell you yes or no. I don't know you well enough. Some people, by the way, an immediate annuity makes sense for a number of reasons. Number one, they just can never take the volatility that exists even in a portfolio. Pardon me, Philip, you mentioned that's 30% in stock, 70% in bonds. Because even in that one, you were down 15% at some point this spring, right? And some people don't want to ever see their portfolio go down. That's one reason. Another could be they have a limited amount of money. This is another one I've seen. They haven't saved that much. They have a limited amount. They don't want to take out more than is going to make their money run out. So you give that to an insurance company. They give you a stipend every month. That's all you have to spend. I'm okay with that variety. Once you get past those 2 points, I really struggle, because then I'm going to agree with the annuity slayer that just build a very moderate portfolio, some exposure to stocks that give you uplift, most of it in bonds. And you're going to be okay in the long haul. There are going to be periods that are going to make you a little unsettled, because they make everybody who invests in stocks unsettled. But I do think that's a better approach.
And I think I like the annuity slayer. I'm reading his stuff. He's got a lot of videos. Holy cow.
Paul Merriman has another annuity guy. Stan the annuity
man. Yeah.
That takes apart annuities too. So does that help, Philip?
Yes. But, one last thing. I just liked what the annuity slayer said, but I thought I'd ask more expert advice on it.
Yeah, no,
we'll take a look.
I'm looking right now, and he slams Ken Morafe, which makes me happy right there.
Oh, there you go.
Right there. I'm on his side right there. Wow, he makes a lot of videos. Holy cow. Anyway, thank you. Thank you for sharing that with me. Thank you for the call. And 855-935. That is our phone number, 855-935-8255. Give us a call. Let's talk about your money questions and issues and problems and solutions even, if you have one. And Tony, you're up next. Welcome to Talking Real Money.
Greetings.
Hey, Tony. Hey. What's up?
Hey, I got a couple questions here about some of my investments. I have one, which I know you don't like, Olympic, which is LDL account, and it's a Roth IRA that I have for my granddaughter, and that's set for her to collect when she turns 44. That's going to be backup for her. I got 30 in that.
Whoa, you got going there.
I'm confused.
It's a Roth IRA that she's going to collect at age 44?
Yes. That's the way I have it set up now. Is that good? I mean, I want to get out of Olympic. The way you guys talk about LPL Financial.
It's Linsco. Okay, LPL. Linsco, and Olympic. Okay. Olympic is a mutual fund?
Well, you're getting ahead of yourself. I'm trying.
It's an investment group. Olympic. They're an LPL
they
broker.
Clear through.
Got it.
Set all that aside for a moment. You try to do something nice for your granddaughter. I think that's terrific. You set some money aside in a Roth IRA. Is that what I'm understanding?
Correct.
Okay. And I don't understand the age 44 part.
Well, I just want her to hold off, because she's getting some other investments too, houses, stuff like that, et cetera, et cetera.
You told her. You just told her.
In case something goes wrong.
You told her not to touch it, basically.
She doesn't know about it yet. It's going to happen after I'm gone.
Okay. Yeah, I would rather her not get it until retirement. Roth IRAs, unless she really had to have the money.
But she needs to know.
The reason, I think, at 44, in case something goes wrong. Maybe she gets married and gets divorced.
Well,
and she ends up broke.
You mean something going wrong is getting married?
She might.
That's a bad joke.
She's only 14 now, so she's got 30 years to go.
This is 30 years. Oh,
now I'm even more confused. You did a Roth IRA for her. Does she have earned income?
Well, I got it for myself originally, but it's in the will for her.
You're going about this backwards, but now we're starting to understand the situation here. Okay. Yeah.
I'm happy. So you're leaving it to her. Perfect.
Yes.
All right. I'm good.
All right.
That's great.
Yeah. So, your question was, what about Linsco Private Ledger? We're not fans because they are not 100% fiduciaries. The products they offer are generally higher expense.
Yep.
They're actively managed, and I have no idea what other fees. Yeah, I mean, I don't know what other fees you may be paying, so I'm not a fan. That would be one issue. The other is, yes, the granddaughter at some point should be told about this money because they're going to know eventually anyway. But age 44 seems a bit random to me. No, I'd move my money if it was my money and I was doing it on my own. I'd go to Vanguard, I'd move all that out and set it up over there and buy a very low cost index fund and get on with my life.
That's what I would do. I concur. Thanks for the call. I appreciate it. 855-935-TALK is our number. 855-935-8255. Give us a call. We'll talk about money with you on this show. It's easy.
Tom and Don are talking real money.
You've heard that about 99% of all financial advisors are not always required to act in your best interest. You've probably been pitched financial products by all manner of friends and relatives, and the investing you have done is probably a hodgepodge of ill-fitting pieces that are doing little to provide the financial security you need. If you're looking for a 100% pure fiduciary, and we'll put that in writing, low-cost, fee-only advisor who always puts you first, give Vestory a call at 800-386-3004. That's 800-386-3004, or visit us online at Vestory, VESTORY.com.
Your guides to a really great financial future. Tom and Don are talking real money.
855-935-TALK, 855-935-8255. Call us. We love talking with you.
Yeah, we do. And we just got off the phone with...
You look really serious there for a minute.
Well, with Tony, right? That was Tony. And he was asking us about a Roth. For a young person, by the way, leaving somebody a Roth, that's wow, that's Christmas and your birthday all rolled into one day because you're getting money you probably didn't expect and you're getting it tax-free. What a wonderful gift that is. But we would not use anyone who clears through Linsco Private Ledger, better known as LPL. I think they may be the biggest in terms of the number of brokers. They're huge.
They're huge. I mean, they once solicited me when I was a broker back in my 20s to hang my license with, when they didn't call themselves LPL, they called themselves Linsco. It's not Linsco Private Ledger anymore. They don't use that. They changed the name to LPL because the other one was long or something. But no, we don't believe in working with an investment advisor / broker dealer.
This is where the confusion always starts because people hold themselves out as a fiduciary, as I'm sure they do in this case, but they are not a full-time fiduciary. You could come in their office, you could meet with them, they're going to say, oh yeah, we're a fiduciary. And then somewhere along the way, when the pressure builds, they can move you into a product that involves a commission. And they're not a fiduciary anymore, and you're not getting the best advice. That's where the rubber meets the road. Most people don't know it. You pointed out many times, Don, that out of the million people that are giving financial advice, it's 1% are full-time, 100% fiduciary.
100%
not very many.
Fiduciaries, yeah. And I looked up the underlying firm that's hanging their license with LPL, and even during those times when they act as a fiduciary, and this is directly from a public document that any of you can read, by the way, it's at advisorinfo.sec.gov. We have a link at our website, and they charge when they act as a fiduciary, when they manage money as a fee-only fiduciary or fee-based fiduciary. On the first $500,000, 2%.
I mean, that's outrageous. I don't think you should pay more than one period.
The next
$500,000,
1.75.
Yeah, that's just too much money. By the way, we know advisors who have filed their federal documents and lied in those documents too. So even those don't mean anything for sure.
Yeah, but it's a crime to lie in them.
We know people who have done that, who have said, here's what I am doing. And then we found out they weren't.
Right.
So,
but
gotta be careful.
It does give you at least some knowledge.
I agree.
And the better armed you are with information, the better your chances of success. And it is up to you. No one is going to really protect you better than you're going to protect you. We'll try to help.
Just to finish the thought on this particular firm, if you're paying them 2% for the pleasure of hopefully financial planning, hopefully looking at your whole financial situation, hopefully getting to know you, putting together a plan, right? That's the 2%. Plus, then there's the investments they're going to put you in, right?
Usually they're actively managed. Usually it'll be.
So they're going to be 70 basis points.
60,
whatever it is.
70, yeah.
So
80.
now your total cost, let's just say for sake of argument, is 3. And let's say you're in a portfolio that's 60% in stocks, 40% in bonds, and you're hoping to make 7. Well, you don't have to be a mathematician to figure out 7 minus 3 is somewhere closer to 4. Now you're getting closer to sort of beating inflation by a little bit. This is the reason costs matter so very, very much. You should pay attention to them. Big time.
Costs matter, but you also can't just be blind to the other things you need, like a plan. Because a lot of people just go willy-nilly into inexpensive, cheap stuff, and then they get no plan and they get no help. This is why Vanguard has always said, you gotta weigh both sides. Fees are okay as long as they're reasonable, because if you have a fiduciary advisor, if you've created this plan, if you have someone holding your hand through the process, properly rebalancing, they've done the math, and they said you can add 3% to the returns that average investors get, because average investors make so many mistakes. And that's pointed out by lots of studies.
They don't do the things they need to do, right? Rebalancing, making sure they stick with a plan. All of those things we know that have added substantially to returns over time.
On our special 4th of July show, which is just like every other show, we have a line open at 855-935-TALK. Give us a call.
Tom and Don are talking real money.
Did you know I wrote a book? Yeah, about 10 years ago, I wrote a book about investing. Financial Physics, with an F, How Money and Investing Really Work. It's a short read. It's a really easy read because, well, as you know, investing is way too easy to be this complicated. And it's been on sale for a long time at Amazon. I updated it in 2018 to a new version. But if you don't want to buy it, you can go buy it at Amazon. It's $10. But if you don't want to buy it, if you want it free, well, you can get it free 2 ways. One, you can get a PDF copy by going to talkingrealmoney.com/free. talkingrealmoney.com/free. If you don't put in the /free, you can't find it. The other way is if you have an iDevice, like an iPhone or an iPad or a Mac, you can go get an interactive version of the book, a special edition that I made that's actually interactive, that's got videos and motion and things going on, and that's also free. Just look for Financial Physics, FYSICS, in the Apple Bookstore or Apple Books or whatever they call it now. Or go to talkingrealmoney.com/free, talkingrealmoney.com/free. And I guarantee you'll enjoy the PDF or the iBook or your money back. Check it out, talkingrealmoney.com/free.
Reality radio for a really great future. We're talking real money.
You know, it's funny how lately time has both crawled and flown by. I don't understand that psychological conflict or contradiction, but it does. It's like, wait, wasn't it just the beginning of June a couple of weeks ago, and now it's July, and now it's the 4th of July, and you know, the markets were way down, and then they came way up, and then they went down again, and then they went every which way. It's dizzying.
Well, and the second quarter was wacky.
The second,
really weird.
Oh, the second quarter was beyond weird. It was.
So if oil, oil was trading at like $60 a barrel, then it went down to $0, then it went back up in the quarter.
Wait. Yeah, it was negative.
Yeah,
it was negative.
If you bought a thing called the NYMEX RBOB gasoline. Maybe those are futures of some kind. I don't know.
Wait, RBOB?
Is
that RBOB, the bunk bed builder?
Exactly. You made 109% in the second quarter. NYMEX crude, which I do believe is some sort of future barrel.
That is a future contract, yeah.
Yeah, 91%. 91%. But if you're more traditional...
The RBOB is a gasoline futures contract, yes.
Okay, there you go. If you're more traditional and you bought like the global Dow...
The global Dow.
A lot of stocks.
Okay.
Yeah. You made 19%. The Standard & Poor's 500, you made 19. The NASDAQ, still The FANG stocks killing me.
Yeah.
Up 30%. And small cap, which everybody's been waiting for, up 21%. So this is the problem with most people. I guarantee it. When we go back and look at history, most investors, pardon me, you're going to see, because we know it happened, a lot of people sold out at the end of the first quarter because they were scared, because this is unprecedented times, because who knows when all these parts of the economy are ever coming back. Nobody knows. So I'm going to move my money into bonds or cash and then wait. And then you waited. And then you waited. And then you waited. And you watched the market go up, up, up. And you pointed out it did have a brief blip back down, and then it went up again. And you missed out on one of the biggest quarters in the history of the U.S. stock market ever. And this is why people equate this watching the economy and then investing with that information. Somehow nobody else who invests knows that, the people that are the institutional investors, which they definitely do. And you just don't want to do that. Conversely, and we've talked about this on the show many times, you've got to have the right asset allocation for your need for return, for your ability to take risk, and how long you need the money. You don't build it based on, here's what I expect the future's going to look like, or it seems so obvious that this is going to happen, right, Don? I mean, this is exactly what you don't do.
But that's exactly what people think investing is. Almost everybody. I mean, really, I think it's the majority who believe that investing is properly guessing the future of something. A stock, oil prices, the market, whatever it might be. It's properly making a bet.
Because that's what so many people did and told you for decades. Right?
But boy, were they wrong.
Yeah.
And it's really hard for us to change these prejudgments that we make about things, these deeply entrenched feelings, by the way, and they're feelings. They are feelings. I see it in my own home life. I have a lovely wife who used to be a stockbroker, and it is so hard to give up. I see it in her all the time. It's hard for her to give up that fervent belief she had as a stockbroker that there were skilled managers, that there were skilled analysts who had the knowledge to pick the right things at the right time.
And many of us believe we could do it ourselves. That just right now, if you were trying to decide what the next 3 months are going to look like, what would you say?
Oh, of course, I have an opinion. Opinion.
What is your opinion?
My opinion of the economy, I think it's going to get worse before it gets better. Economically,
I share that.
I think it's going to get worse. But I know something that apparently most people don't know, is that does not translate into knowledge about what prices will do. It does not. There is no connection. And people think there should be.
People do.
But they think there should be. As a matter of fact, I read a piece in the New York Times recently where somebody said the market's just wrong. The market's just wrong. And I'm going, how can the market be wrong? The market is what it is. It is all of these people taking all of the best information they can get their hands on and making a decision as to values. That's how prices are set, and that's the only way they're ever going to be set unless there's market manipulation. 855-935-TALK, our number.
Tom and Don are talking real money.
If you're sick of your self-interested financial advisor and are looking for a 100% fiduciary low-fee investment advisor, call my firm Vestory at 800-386-3004 or visit us at vestory.com.
For your real life and real future, Tom and Don are talking real money.
Your life involves money, and you need it to live now and comfortably into the future. That's why we're here every Saturday to help you understand this better and to answer your questions at 855-935-TALK, 855-935-8255. You can call that number 24/7 too and ask questions, and we'll answer them on future podcasts.
Even on the 4th of July, we are here.
Even on the 4th of July.
That's right.
And
Because what else? I can't go in my above ground pool, right? I mean, it's 67 degrees. No, that's not going to happen.
Are there 3 days a year when you can go in your above ground pool?
So far, it's been 2. I am counting.
You're looking forward to that third. Give me that third day. Oh,
maybe August sometime. We'll see.
We'll see. I'm not coming out. No, see, the thing is I'm not coming to Seattle this summer. Every time I come out, it's in the 90s and everybody's on fire. So I didn't come and
can't see from here to the other side of the street.
Honestly, we couldn't see across Lake Washington the last 2 times I was out there.
I know.
And now
Weird.
It's cold.
No smoke, freezing to death.
My fault. Yeah. It's all my fault. I blame myself for everything. 855-935-TALK is our phone number. It's pretty easy, and it's really free, and we really do want to help because, well, that's what we do. That's why we have a firm that does this. That's why we try to explain how it's supposed to work, how investing. We talked earlier about how there's a really fine line you need to walk between low fees and getting the help you need. And because if you don't get help, you tend to do dumb things. People tend to invest really badly. They sell when prices are low and they buy when they're high. It's a typical human thing to do. So you need help, but you don't want to overpay for it. So one of the ways that people have lately tried to seek out help, and it's something relatively new, is through Robo advisors like Betterment and Wealthfront and a whole bunch of
Acorns.
Acorns is one, kind of a different tilt on it, different take on it, because they're trying to start you small with Acorns. But
yeah, I mean, and I think when you're accumulating money, we had somebody call about setting up a Roth IRA they're going to leave for their grandkid. I think using a service like this, it makes sense. Money just goes in, it gets invested. You can get some of these services that are they're very diversified investments. The costs are very low. I think for many people that there's absolutely nothing wrong with that approach. I think it's good. Here's where the trouble generally starts. That is when you need behavioral help, when you need transitional help, your life's changing in some way, and when you need even general financial information. The problem with the Robo is exactly that. It's not a human being. Many of these decisions do need human involvement. And you can remember, it wasn't that long ago, Don, when in our business, people were saying, hey, it's all over. Humans aren't going to be part of this equation anymore. It's going to be the Robos. They're going to do it all. They're going to do it for far less. Wasn't there a movie like that where they took over? But
several of those.
Yeah, that's right. But so the thing is, it turns out that new survey out that shows it's almost 7 out of 10 investors still say they'd rather have a human involved over just technology, right? They want the help and they want it. And 40% say they're going to need help in the future. I think even if you're a very good investor, it's never a bad idea to go get a look at your situation from a 100% fee only fiduciary advisor. I think that just makes sense, because even if you're extremely knowledgeable, most of us really need somebody else to look at our situation and say, you forgot about this or consider this. That aside, I would, for most people, say go get a human being over a computer.
Well, we tried several years ago, because we like to be at the forefront of technology if we can. We tried several years ago to set up a small robo advisory service for clients who didn't have enough for us to manage their money. And we found people did not want the robo service as much as they wanted the constant presence of a human being in their financial life. So we've tried to make the fees very fair for that, much fairer than most of the others. Go check it out. We have our fees up there compared to a lot of others at TalkingRealMoney.com. 855-935-TALK is our number, 855-935-8255. And Bob, you're up. Welcome to Talking Real Money.
Happy 4th, Bob.
Thank you.
What can we do
I have
for
a
you?
question. What is your thoughts on annuities? I'm a newer listener, and I'm 64, and I was just curious your thoughts on them.
What kind of annuities?
Are you driving, Bob? Are you driving? You might pull over.
I am. I'm hands-free. I'm just about home, so I'm good.
Okay.
All right, good.
Bob, what kind of annuities are we talking about? Because there's lots of them.
Well, I'm just was I don't know a thing about them really, except generally what they are. So
let me just give you generally my opinion. Let me generally give you an opinion. Generally, all things being equal with other products out there in the industry for investing, annuities are a terrible, terrible choice, generally speaking. They tend to be very expensive. They tend to pay high commissions to the salespeople, ridiculous commissions that, by the way, they really love the fact they don't even have to disclose those. They love that. They are complex, convoluted vehicles most of the time. The simplest ones do little or nothing and have very little benefit, negligible benefits. So I think there are, in almost every case, there are a few exceptions, but almost every case you can find a better way to invest than through an annuity.
I mean, then there's also the illiquidity, the fact that you no longer have control. I mean, there's a lot of things we do not like about them. At the beginning of the program, we did talk about an immediate annuity. For some people, that might make sense. But right, John, you're right, Don. In a general sense, if you just came in my office and said, what about annuities? I would tell you not to buy one and not to be sold one, because most of them are sold. They're not bought anyway. Few people wake up and say, can't wait to go down to Home Depot and pick up an equity index annuity.
And Bob, thanks for the call. We really appreciate it. And Dave, you're next. Welcome to Talking Real Money.
Thank you very much. My general question for you is, if someone feels they can do something on their own, most people have a 401k, so I do some investing in my own. What is the benchmark that you go, okay, I'm doing okay by myself? Is it rate of return? If retirement is a 40-year train ride, isn't it possible that somebody can actually do something on their own?
Yes.
Absolutely.
Yes. We suggest people do things on their own all the time, but not try to beat the market. That we do not believe is possible, except by getting lucky.
And what is your stock to bond ratio?
My stock to bond right now, I would say is, I'm going to say it's 80-20. I'm 64, but that part of it is because I'm also sitting on cash because my wife and I just sold a house. So for me,
okay.
I've kind of been in the stock market since 86. So buy and hold for me is still something I think does work. I believe the Dow was somewhere around 1,600 in 1986. So to me,
I'm not so concerned about that. No, here's the way I'd look at it. Number one, at 64, you need to know what rate of return you need to retire. You need to know at 80-20, are you willing to lose 35 or 40% of your money, which is definitely a possibility. That's how I would look at it.
And you have to understand that the odds of you beating the market over any extended period of time in any scenario short of just being really lucky is really unlikely. Thanks for calling. I appreciate it. Take care.
Tom and Don are talking real money.
We don't believe in seat-of-your-pants investing. We believe investing should be based on solid science, on academic research. That's why on July 29th, we'll be hosting a brand new class, The New Science of Real Investing, at 8 a.m. via Zoom. Get your tickets right now at talkingrealmoney.com. Just click on the new events button or the events button and reserve your place. Go to talkingrealmoney.com and make sure you're there to learn the science of real investing in our next online Zoom class. Go to talkingrealmoney.com, click on the events button.
Your guides to a really great financial future. Tom and Don are talking real money.
Again, we believe that people are capable of managing their own money. We just don't want you to believe that you can beat the market because we don't believe you can. We don't believe it's possible long term. So match the market. Make sure it's set up for your risk tolerance. But it's also true that a lot of people need help, maybe on a one-off basis, which is why we at Vestory believe in helping everyone who asks. So go to Vestory.com or TalkingRealMoney.com and set up an appointment to meet with one of our advisors. There's no obligation, no high-pressure sales pitch.
We hope you realize advise that the information provided on Talking Real Money is for educational and hopefully enjoyable purposes only. Providing personalized financial planning or investing advice takes time, so please consult with a really good fee-only fiduciary investment, tax, or legal advisor. We know a good one. Investing must always involve risk. In other words, you can and probably will lose money at times. Also, as much as you want it, no one can accurately, consistently predict the future. So past performance doesn't tell you a darn thing about what the future will bring. Unlike many other programs that say something similar, Talking Real Money is not trying to get you to buy or sell any financial products or securities. Instead, the program is provided as a public service by Vestry, a fee-only registered investment advisor. Thanks for listening, and please visit TalkingRealMoney.com for more information and disclosures. Are we done now?